Hello guys, welcome back to my channel. We are continuing with the topic accounting equation. Here I have put few more points regarding the accounting equation. First of all, again, we know that in accounting equation, assets is equals to liability plus capital. Whatever assets are there in the business must have been invested by the owner himself or somebody outsider that becomes liability to the business. So here along we have first transaction where Mr. X started business with cash rupees 90,000. How much is Mr. X investing into his business? That is cash of rupees 90,000, and so his capital goes here with rupees 90,000. Business is receiving a cash and investor is the owner himself. So 90,000 goes in cash and 90,000 is added in capital. And he raised a loan from his friend, that is rupees 2 lakh through check. Now he has raised a loan through check, so that means he is receiving the money in his bank account worth rupees 2 lakh. The money he is receiving in his bank account because of check has been given by his friend as a loan. So loan of Y will become a liability here with the rupees. Loan of Y will become a liability with the rupees 2 lakh in this case. So 90,000 was the investment of the owner and he raised a loan from his friend worth rupees 2 lakh. So here total investment in the business is 2 lakh 90,000. Here also total investment brought in by owner himself and from his friend is 2 lakh 90,000. Now the second point is he purchased machinery worth rupees 1 lakh 80,000 and payment was made by check. In the business, what is coming in, that is machinery. Machinery he purchased for rupees 1 lakh 80,000. In the business, machinery is coming. What is going out, that is payment is made by check. So money is going from his bank account, that is 1 lakh 80,000 here. Zero change in your cash balance and zero change in your loan amount, zero change in your capital account. Machinery came in, payment was made through check, so machinery added in assets and payment made from his bank account. Now the next point is here. Third point, depreciation on machinery at the rate 10%. 1 lakh 80,000 was the worth of machinery which have been depreciated at the rate 10%. Machinery we need to depreciate at the rate 10%. 1 lakh 80,000 is the value of machinery. 10% is reduction in the machinery due to usage. When the machinery is purchased, after some time its value reduces, that is known in the business depreciation. Here 1 lakh 80,000, 10% becomes rupees 18,000. So depreciation is not paid to someone, rather it is reducing your asset value with rupees 18,000. At the same time it is reducing your capital with rupees 18,000 because machinery value is reducing, that is the loss of the business, and every time whatever loss or profit is there belongs to only the owner, and here owner is given a deduction with rupees 18,000 in his capital. So no change in cash, no change in bank balance, no change in loan amount, only the depreciation is reduced from your machinery value and also from your capital value because it is a loss to the business. It is not paid to someone else. For example, like you people have your assets for your vehicle is Activa, or either it could be the Bullet also. When you have these things, when you buy it, whatever value you have bought them for, and when you make them in a use, their value reduces. They become second hand because you are making use of them, and that usage in the business is termed with the word depreciation. This reduction in the value is natural, not paid to somebody else. So it is only deducted from the asset and also from the capital because it is the owner's loss. Now the next point over here is X sold his personal investment that was must be laying at his home for rupees 50,000 and brought the cash into the business. Here when he is selling his personal investment, till this point no journal was required. But what he did after selling the investment, whatever cash he got, he brought that cash into the business. So in this transaction, 50,000 rupees is the cash brought into the business. No change in the bank balance, no change in the machinery, no change in Y's loan because loan has not been raised. What is X is investing into the business. X is bringing cash into the business. So X capital will increase with rupees 50,000. Here it is further introduction of capital by the owner. His capital in the business is increasing by rupees 50,000 and also cash in the business increasing by rupees 50,000. Next is X paid life insurance premium. Now life insurance premium, whether he pays on his own life, on wife's life or son, daughter, in that very case it is treated as drawings from the business. Drawings is what? When owner invests into the business, that becomes capital. When he takes this money back to his house for the payment of his personal expenses, it is known as drawings. So here X paid. X paid means out of the business money is going out by check. So no change in cash balance, but check, that means bank balance is reducing. Here bank balance is reducing with 20,000, and this 20,000 is not reducing his machinery, not reducing loan amount. Rather, he is taking this 20,000 back from his investment into the business. He is paying life insurance premium, that is a drawings, and drawings are deducted from capital. So here 20,000 less from capital and 20,000 from cash. X paid income tax. X or he himself paid income tax. Income tax again is drawings because the income belongs to owner. And owner and business here are treated one and the same. So whatever income tax is paid by him is treated as drawings here. So 2,000 rupees is deductible from cash because it is paid. So 2,000 balance is deductible from cash. No change in cash, no change in bank balance, no change in machinery, no changes known amount, but his capital is reducing with rupees 2,000 here. All the transactions are done. Now let's see with what he is left over here with the balance. 1,38,000 is the balance in the cash, and here zero balance is in the bank account, and his asset is left over, his machinery is left over with the value of 1,62,000. When we add up here, it becomes 3 lakh rupees. Y's loan remain with 2 lakh into the business, and here when we take, it becomes 30,000 from here and 20,000 10. So it will become 1 lakh. As I told you that the total here is the total 3 lakh rupees. Same way here we are getting a total of 3 lakh rupees. So in the business, assets are always is equals to the total of liability plus capital. Our accounting equation is right. This is for the day transactions which we added on to our accounting equation chapter. We will continue in the next topic relating to further few more transactions. Thanks for the day. Like, share and subscribe. Accountitude keeps going.